What is going on, Cyber Fam? Back at it again. Happy Friday. All right. Some of you are so wound up over all this red in the stock market. You guys need to just take a step back and relax a little bit. Before we get started in this video, just to let you know, there's going to be sections. So if you feel like skipping, feel free to go ahead. But I'm going to play a clip. Guy talks about Cathie Wood. After that, I'm going to chime in and give you my thoughts on the situation. All right? Hang tight.
Listen, I don't own any of those stocks, but we all understand that.
Hey, you own Coinbase? That's
based
36%
on traditional. I own Coinbase. We all understand that using traditional price earnings or book value to market cap or enterprise value to EBITDA. Like if you take those traditional metrics that we value corporations at, none of these stocks are buyable. She's looking at things on a 5-year time horizon, and what she's basically trying to do is own companies that have network effects and a platform where they're spending money today to make much, much more tomorrow once they've established themselves. Look, this is the type of situation where I would normally buy the dip. It is the most despised corner of the market right now, after having been the most loved corner of the market a year ago. She has a tendency to buy headline stocks. Like, if you look at what all of these companies have in common that you just reeled off, what they all have in common is consumers are talking about them, Reddit boards are talking about them, traders on Twitter are talking about them, and they're controversial. They're in the headlines like every single day. That's the part of it that makes it very different from what somebody that's trying to invest in growth in a quantitative way, let's say. Like, why else would DraftKings be in the same portfolio as Tesla? They have nothing to do with each other than traders love talking about these stocks. So I think that keeps a lot of people from saying, I'm going to pull the trigger, buy the dip on ARK, but I don't think people are going to just not want to buy growth ever again. They just might not want to buy it in this way. But she's not doing this on a quarterly basis. And I think if you're allocating based on that assumption that she's trying to track the S&P over a 90-day period, you're going to be disappointed. I think she's thinking longer term and thinking bigger. But look, if you think about this year, one of the biggest themes this year was the reopen. And cyclical stocks, financial stocks, energy stocks had their day in the sun. That money had to come from somewhere. It came from these high multiple darlings of 2020. We see this play out every year. What was trash last year was treasure this year, and vice versa. And next year it could be another reversal. So it would be very, very premature to completely write off some of the fastest growing companies in America just because their stock prices had to take a time out this year.
Just off the top, this is not investment advice, all right? You guys know that. This is just something that I do for myself and increase my conviction for myself. Let me ask you a question. Are you a long-term investor or not? That's really the only question you're going to answer here, right? Because if you're not, and if you're trying to trade, then you're in it now. You're in it now. It's all red. You gotta go through your spaghetti indicators with MACDs and whatever moving averages and all that stuff. That's you, bro. You do that. You do what you got to do, and then you make them gains however you need to. But if you're a long-term investor, guys, this shouldn't come to you as a surprise, okay? The market's not always going to go up and to the right. What I'm doing is just taking a deep breath and sitting back and relaxing, okay? Now, yeah, I have some unrealized losses as well. Just like the rest of you guys, unless you sold, then you realize them. And, I'm really sorry to hear that. I'm really trying to focus on the core competencies of these businesses. But we did see this stuff coming, guys, all right? How did I see this stuff coming without me being a finance bro or anything like that? It's quite simple. You got to just look around you. I even told you in that video, and I'll put a link to it here if you're really curious on watching it or something. But I told you in that video, just look around you. See what the impact of whatever COVID and all this other stuff happened. See what it did, right? In my immediate case, everywhere I went, whether it was groceries or food or whatever it was, went up in price. Rent went up in price. Housing went up in price. Everything went up in price. Guess what didn't go up in price though? Wages, right? Like we all get paid the same, if not just a little bit more. Those of us that are lucky, that is. That's going to be a problem. You're going to see the impact of that. It's going to be delayed. You don't see the effect immediately. You will see it sort of gradually take pace. Just like how inflation, when the Fed was printing money and all this stuff, you didn't see that immediately. Housing prices didn't go up immediately. It was actually for a while, there was a lull, right? So things like that and stocks the growth stocks as well. It didn't go up immediately. Tesla went down before it went up. Palantir was pretty much stagnant before it went up all the way to like 30 something dollars per share, and then came back crashing down. Full disclosure, I bought a bunch of Palantir shares when it was around 25, and then again when it was around 22. So I'm in a lot in the red. And if we're being honest, guys, a lot of the stuff we've seen before. We saw this in 2019. We saw this before, I think in like 2014, 15, 18. There's a lot of times when this happens. It's just cyclical movement, right? People have started to see that growth is kind of maybe overextending, you know, from what they think. So they're moving that money back into something of value so that as inflation starts running rampant, they're able to lose less money. But the thing is, I'm not too worried because for me, I was actually hoping that the stock price stays low a little bit. Stock is not the same thing as a company. Even though it is just a share of a company, you got to understand that the fluctuations of stock prices is not always attached to fundamentals of the company. You can see this graph with Tesla. They had a fantastic fundamental model. A lot of the stuff they're doing is great, but somehow their stock was still basically trading sideways for years, actually. Let's address something before we talk about Cathie Wood. When it comes to investing, guys, I try not to put in what I'm not willing to lose a little bit. I know that overall the market always goes up. It's just a matter of time. But I try to put in a little by little. I buy on red days. That's usually my strategy. It's worked for me well so far, but I have missed some. Like, for example, right now, I have no money to buy, really, right? And part of that is really my impulsiveness from before, but it is what it is. Like, as long as you're invested in good companies that are fundamentally strong and have good cash flow and all this other stuff, you should be good to go. For me, it's pretty much only in Tesla and Palantir and a little bit of ARK. So now let's switch gears and move on to Cathie Wood. Cathie Wood basically recently just sold a bunch of Tesla shares. She sold about $5 million worth of Tesla shares and bought almost $7 million worth of Palantir shares. So, like, these guys are smarter than us, guys, okay? Like, everyone wants to criticize Cathie Wood and all this other stuff, but, like, you know, you gotta admit her strategy does work. Now, she's getting a lot of hate right now because, you know, her ARK, for example, the flagship, is grossly underperforming the S&P. S&P is up like 20% or something in 2021, a little bit more. ARK was, I think, down like almost the same 20%. So you would almost lose that entire delta. And I understand, like, I have a lot of money in ARK. I get it. I see the loss too, right? But you guys gotta understand, what she's doing is actually quite, like, it's not rocket science. She's betting on innovation. She's betting on companies that she believes is on the bleeding and cutting edge. Now, as far as the tech companies in ARK, I can straight up tell you that some of the processes that they're following resonate throughout the entire industry. They're actually pioneering and leading the way in terms of the innovations within the process space or anything like that. They are very much seen as the best places to work. Like, anybody I speak to will definitely want to work for Spotify, will definitely want to work for Netflix, Google, Tesla, Palantir. Yeah, they are innovative companies at that same edge. The stock price is completely detached from some of that sometimes, okay? This is one of those times. Whenever you bet on companies that are in the bleeding edge, their fundamentals never look that good. You have to read into other things. You have to look at other indicators that point to the right future. If she's right, and I believe that she's right, then the gains will far outweigh the losses by a large margin. If you're somebody that's not willing to have that patience and see this whole thing play out, it is your money. You don't need to put it somewhere where you don't feel it's right. But the thing is, Cathie Wood's strategy actually does work. Because innovation will always win, guys. Always. There's not any situation in the world where a disruptor does not disrupt the existing incumbents. The question is always time. And the second question now with the whole stock market that's important is which company is doing the most innovation. Now, usually you can pick them. Usually you can pick one or two companies that are doing very clear innovations like Tesla, Palantir. That doesn't mean that I completely agree with everything that Cathie says. Personally, I don't like Zoom. Every other company I work for, yeah, we use Zoom throughout COVID. But we moved off of Zoom and we're pretty much using Teams throughout, actually. Like, we were barely using Zoom. And actually, just yesterday, I had a big issue with Zoom. You know, I don't know. Like, you don't have to agree with everything. But the idea is her strategy of actively managing as you move into a future where the present is currently being disrupted is a winning strategy in my books. So, and on top of that, her top conviction stocks are pretty much like the stuff that I like. I like the stuff that she's investing in. I understand the stuff that she's investing in. Palantir is one of those companies for ARK, which is on almost every fund that she has. Palantir is a way future company. There's lots of FUD, there's lots of stuff around there. It reminds me of Tesla back in 2012. You have tons of time to buy Palantir, you have tons of time to do the research, so don't feel rushed into anything. Palantir is a deep tech company. These guys have very solid software from what I can see and from what I can tell. I'm super confident in what they're going to do in the future. They have deep-rooted knowledge in what the industry needs. They're actually literally rewriting the entire way the lines of businesses operate. You know, they're addressing so many problems, and they're such a budding company in the commercial space. They just started and they're already addressing certain problems. Like, look at the news, guys. Just do your research on that. So don't freak out. We're good, man. For Tesla, we have 2 new factories that are way bigger than the existing factories that are in operation right now coming online this year. Plus, on top of that, there's going to be new product announcements. Plus, on top of that, they are in record margins. Tesla is at the beginning of a ramp that we are not fully realizing here. In 5 or 6 years, we're going to look at the stock price right now, and we're going to say, holy crap, like, what the hell was I thinking? Why the hell didn't I buy that then? Not me, I'm buying. Some of you are telling me, oh, I missed Tesla. You're crazy. Tesla is a guaranteed 6 to 7x from right here where we are right now. At least that's the way I'm looking at it. These are the moments that where retail investors like me and you lose tons of money. We freak out, we're emotional, we're betting our own money. So we understand, like, it's a different feeling when you're betting your own money, right? Fund managers, they bet other people's money. They get like a big account. And it's really just based on arbitrage. But for us, it's our money, it's our future, it's our kids' future. I understand the feeling. This whole channel is based on this family's investing and tracking the journey. So I totally get it. But remember, just the way that you're stressed out because it's your own money, you should also feel just as confident in your own research. Always do your own research. Always do everything that you possibly can to know that the money that you worked hard to earn is in the right place. And for me, that's in Tesla, that's in Palantir, and that's in ARK. I will not buy anything else. I am researching a few other companies, but I won't put any of that content out unless I'm fully confident in what I'm doing. And with that, I think I'll let you guys go. I've been rambling on long enough. I wish you guys a beautiful weekend. Please take some time and enjoy with your families, and I will see you guys in the next one. Peace.